But let's put the focus then on some stock-specific action. Ujjivan Financial is a stock that has been focused for a while. In fact, the counter has seen gains of over 80% if we look at the last year. We have Sudha Suresh, MD and CEO at Ujjivan Financial, joining in now to discuss what has led to this growth and the drivers for the business, of course, going ahead. Ms. Suresh, thanks so much for joining, and it's always good to have you on. You know, there has been sort of a trend recently where, in terms of at least market participants, have been looking a lot at financial companies like yourself. The themes seem to be in place to really support growth going ahead from here. We're once again seeing a normal monsoon on a sort of a larger, with a larger perspective. Where do you see the growth coming from, particularly if we talk about the remaining part of fiscal 19? What are the growth drivers that you have in focus?
Good morning, Nivrita, and it's a pleasure to join and speak on the Ujjivan growth. As we see, and the guidance that we have given in the last earnings call, we see FY19 as a key driver for our growth, and that growth will come all around, not only in our microfinance business, but also in the other products that we have launched. So we have the housing, affordable housing, as well as the MSE, and we would see very robust growth there on the strong foundation of the growth that we had last year in these two products. Overall, we do see portfolio growth almost with a 30 to 35% CAGR over the next 3 to 5 years, and that comes from the fact that there is a huge potential in the market. We are also expanding geographically, also converting the existing network of our asset branches into full-fledged banking outlets, and we are also in the process of establishing almost about 120 branches by FY19 across the unbanked rural center. So put together, we do have very good prospects for an all-round growth, and that's the dimension that we will focus on in the next 3 years. You see, having faced the demonetization impact in the last year, we have already taken the brunt of credit costs. We do feel that our growth story largely written not only by the existing product in microfinance with individual loans, as also with the MSE and housing. We are also looking at some more key new initiatives. These initiatives could include, one, the personal loan against salaries for blue-collared salaried workers. It also includes a tie-up which we have with a third-party vendor for two-wheeler financing for our customers. We are also looking at expanding on the agri side, typically in dairy, animal husbandry, as well as we are looking at farm equipments. We are also looking at, in the MSE side, a cash credit OD product, which could be both a simple cash credit overdraft, or it could also be combined with a term loan. On the housing, affordable housing, we are looking at a composite product. So overall, I think a lot of things are coming, and apart from that, on the FIG, we are also looking at lending to NBFCs and MFIs. The product launch is expected very shortly in starting Q2, and on the whole, I think the launch of these new initiatives will also greatly help us in terms of building our portfolio as we see over the next 3 years. So I do think the prospects for Ujjivan's growth story, all-around growth story, is going to be pretty good.
Absolutely. In fact, from what you're telling us, you already have such a strong focus at the moment. If we talk about the group loans and the microfinance, going ahead then, two-wheeler financing, farm equipment, a focus on agri. What is the sort of opportunity that you're seeing in these newer spaces that you're now considering?
Yeah, so if you typically look at the areas not only where we have our existing branches and they're getting converted into banking outlets, we are overall looking at about 475 banking outlets by the close of FY19, and these would include more than 120 banking outlets in the unbanked rural areas. So it is in these unbanked rural areas that we would see the focus for the growth essentially of products, not only on the liability side where we are trying to serve the unserved and underserved in building up the deposit base, but largely we would also look at the launch of these new agri products that I was just speaking about, typically the farm equipments, the dairy and animal husbandry. But other than that, we are also looking at a good offtake across 200 plus branches, both in our MSE business as well as the affordable housing business.
All right, fair enough. So clearly this is something that has been then seen as a need in the areas that you are now expanding to. Is that right? Is that fair enough to say? Also, at the moment you already have quite a diversified geographical contribution. States like Karnataka, Tamil Nadu, West Bengal, these do make up the bulk of the contribution. But that said, you already have quite a large presence. In terms of, the additional branches that you are adding on, any particular states or areas regionally that you can share with us where you will be focusing?
So this year our concentration, as I said, would be on the unbanked rural areas, and which are spread across largely in the east as well as some in the west and other regions. So the URCs will be a focus this year, but we would also be looking at a network of our branch expansion coming in the next couple of years, which is typically FY 20 to 21, where we could open additional branches in areas which have good potential. And the potential could be not only in our microfinance business, but it could also we could also look at potentially areas which are good to be tapped for the affordable housing, because the affordable housing segment is something which we feel across the unserved customers there is a huge potential to grow.
All right, just a last question then before we let you go. Clearly, you are looking at expanding the offering as well as the geographical reach. What then does this do to your margin outlook? Because we did see NIMs come under a bit of pressure. If you look at it year on year, it's of course still above 10% levels. But what is the outlook on that front?
Yeah, so as you see, this year is also going to be an investment year in which we are expanding our branch base to almost 475 branches. We will see some pressure on the OPEX as well as on the cost to income ratio. But overall on the NIM, we would expect it largely to remain at the same levels. We were at 10.6 in March 2018, and we would largely expect the NIM to be flattish or around the same range.
All right, fair enough. We'll leave it at that. Thanks so much for joining in, giving us a sense of where the company is headed from there. That's Sudha Suresh, MD and CEO at Ujjivan Financial Services.
Thank you.
Planning to expand the offering, really going ahead from here. Agri will come into focus, dairy, farm equipment, two-wheeler as well, a tie-up along those lines. So a lot of announcements then in the year ahead for us to watch out for from the company.